The Indian Railways is barely chugging along despite repeated reassurances that the economic slowdown and stiff competition will not derail its growth. Data for the just concluded financial year indicates that things are far from being close to target. The railway has actually seen a contraction in revenue growth. CNBC TV 18's Ashpreet Sethi and Ashmit Kumar have more details.
The railways, because of transport anywhere in the world, their revenue targets are dependent upon what your customers are going to handle.
Right.
If the customer themselves don't come forward and try to meet their own revenue projections, how are you expecting the railways to do it?
Sure.
Unfortunately for the railway minister, things have not gone according to plan. Data for FY17, which CNBC TV 18 has accessed, shows that revenues have contracted nearly 0.5% from FY16 levels to 1.64 lakh crore rupees. That's a far cry from the widely expected 4% rise. Sources attribute a large part of this contraction to a fall in freight revenues. That same data we've accessed shows that while the railways earned 1.06 lakh crore rupees in FY17 through the transport of goods, this was still 3.5% lower than its revised target for the year. And this is mainly because of a 50 million ton shortfall in coal traffic, because overall freight volumes have actually beaten estimates by a margin of over 1%. However, the Railway Ministry hopes that things will improve in FY18 as the coal and iron ore market picks up. The fact that more items have been added to the railway's freight kitty should also help. One silver lining for the railways is revenues from the human side of the business, the passengers. Passenger fares have earned it 47,500 crore rupees in FY17. That's 1,900 crore rupees more than in FY16. This has been possible because the railways ferried 820 million passengers in FY17 despite stiff competition from airlines and buses. This business could see a further improvement in FY18. Internal targets for the coming fiscal put gross traffic earnings at 1.89 lakh crore rupees and freight earning crossing 1.18 lakh crore rupees. These targets should come within reach once the newly approved 5-member Rail Development Authority gets to work revising ticket and freight prices. Experts hope that this, combined with more investment ideas from the new regulator, will improve the transport giant's growth momentum.
As far as the Development Authority is concerned, what little bit I understand, this also will give access to tracks, and this authority will decide on the private players to come on the track.
But the full impact of the new regulator may not be felt this year. We learn that as per the current timelines, the government is likely to issue a gazette notification on the setting up of the Rail Development Authority by the 15th of April. This will be followed by the setting up of a search and selection panel, which is expected to call for members and chairmen by the end of May. Legislative action giving this regulator its various powers will follow, meaning that even if fast-tracked, the regulator will be operational only by August. So even if this timeline is adhered to, the regulator will have just half a year to formulate and implement its new policies. In New Delhi, with Ashpreet Sethi, Ashmit Kumar.